everyone, welcome to the 7th session of the HKU iDendron Entrepreneurship Academy. Hello, so today we are glad to have a guest from the States. Edith Young is the General Partner of Raise Capital, and she will share what it takes for startups to pitch their ideas and products to investors, and how they can prepare for the next stage of fundraising. I know many of the participants are eager to know more about how we think and what would they advise. So now is your chance. Don't hesitate to submit your question at the Q&A box. So without further ado, let me pass the time to Edith. Hello, Edith.
Hey, how are you? Thank you for having me.
Thank you.
So should we get started? Should I go straight into the presentation and then we'll open for Q&A later?
Yeah, sure. Thank you, Edith.
Okay, let's do it. All right, guys, since we're on the topic of, I'm sure that we have tons of other discussion to have afterwards, but I'm going to go over a really, really quick presentation around startup pitching. By the way, I intentionally trying to make this a more lighthearted conversation because I think at the end of the day, pitching your startup is really scary thing. But at the end of the day, like if you are really enjoying this process, you got to make it fun, right? So I'm really trying to like distill it into something that for you to really to easily understand. All right, so to start with, let's make startup pitching great again. And thank God this man is no longer running the US. We're very, very happy being in San Francisco. But anyway, political things aside, as Taurus mentioned earlier, I'm general partner in Raise Capital. Before Raise Capital, I was a general partner at 500 Startups, and which invests in many startups. I think 500 now have 16 unicorn. I invested in 2 of them. But before that, I worked on Dolphin browser, which is a mobile browser. Even before that, 10 years mostly in enterprise software. When I have nothing to do, I love to code, but you definitely don't want me to do it anymore. All right, so what I want to do in the next 20-25 minutes or so is really sort of like in plain English, really think from certain things that I look for as an investor, and what are some of the things that you as a founder, as you're pitching your startup, what you may want us to say or not say, and what are the key things that I look for in your pitch, and what do you need to do when you're done with the pitch. So just to set expectations so you as a founder will know where I'm coming from as an investor. So what do I really want as an investor? Well, honestly, as an investor, all I want is to invest in the next Mark Zuckerberg. That's how he looked like when he was still at Harvard. And one day, I really hope that he's going to look something like this and happen to be working on some of the biggest platform in the world that everybody are dying to buy your product. That's really what I'm looking for, right? I want to look somebody that looks like that, amazing platform and products that everybody want to buy. And so from your point of view, what do you want from me? Well, in plain English, please give me some money, right? The whole point of you talking to any investor whatsoever is one day, obviously, that you would love for them to put money in. And ideally, from somebody who can help you, right? Money is one thing, but wouldn't that be great if potentially an investor can also, I can even help you in certain things about operation. And then ideally from somebody who's been there, done that, right? Awesome. Like I get investment from somebody who's been there, done that, who can help me. How great is that? Well, but imagine, let's say, Taurus and I meet for the first time, and now you know what I want, and you also know what he wants. But at the end of the day, if you're first time pitching an investor, it's just the first date. It is like dating. What's that mean? Well, you may think that, oh, you had an amazing investor meeting. This is just amazing. And the reality is there is no such thing, and I hate to break it to you, there's no such thing for an investor and a founder to truly love at first sight. Because as a responsible investor, I will not, cannot and actually really should not just invest because the first time I need you. It's not possible, because at the end of the day, imagine like if you as a founder, you start hiring somebody or put money into something, you really want to be sure that I'm really 100% bullish about this founder, this business and whatnot. So your key thing is about getting the second meeting. That's really the only objective. If you're pitching an investor for the first time, is to get a second date, the second meeting. So if you're first time pitching an investor, what exactly do you need to say in your first pitch so you will get the second meeting? So I'm going to give you some example. So to start with, what are you building? And this particular screenshot was actually, I think, the seed or Series A for Facebook. It wasn't even Facebook.com then, it's the Facebook from many, many years ago. But even from that many years ago, they're very clear about what they're building, which, by the way, like a lot of the founders, particular from Asia, often like to say, oh, we're a platform, we're an ecosystem. Everybody want to be an ecosystem. Everybody wanted to be a platform. When you're first starting out, you're not a platform yet. So in this case, Facebook is basically saying, I'm an online directory for student, alumni, faculty, and staff to connect on campuses and universities. This is all it is, and happen to have messaging system. Compared to what they are today is obviously a huge difference. But when you're pitching your company for the first time, tell your investor it is what it is. What exactly is it? Then the second thing is, what exactly is the problem are you trying to solve? So this particular slide is from Airbnb when they were pitching Seed. And the problem was very simple. Well, people like to travel for cheap. So price is a problem. Hotel is not really warm. I don't meet anybody from hotel. And this is the best way to connect the hosts and the travelers with a super reasonable price. So Airbnb is the answer. In this particular case, it's just really clear. It's not even a fancy diagram or whatnot. It's just very clear about price, hotel, difficult to find, local hosts as the problem. All right, then how does it work? Usually, at least for raise capital on our website, we're very clear about what we look for in the first pitch. We actually love to see a demo if you have one. But let's say if you still, you don't want to show a demo yet, or you're not ready, but at least some sort of flow chart to clearly explain who are your users, what are some of the steps, and why, how exactly are you solving that problem? And to be very, very clear about that. And then after that, if you have already launched, usually the first thing I would want to ask you is, what's the traction? So this is actually for LinkedIn Series A, Series A to B. So of course, everybody wants to show a hockey stick from nothing and is accelerated growth. And obviously not everybody will look like this, but it is something that often investors wanted to look for is this a high growth company? So that when we invest, then we will know that the money is actually go straight to marketing to accelerate this growth even more. Next is, how do you make money? We don't actually want you to know exactly or making money today, but we do want to know that you have thought about it. Because at the end of the day, there's only X number of ways to monetize, right? Either subscription, usage, or you pay for a product, or you pay through a marketplace, then you make commission. But whatever it is, business model, often many platforms have been there, done that. And this is another example of Airbnb again, which they take 20%, 10% commission of each of the transaction. Average fee is going to be this, therefore we calculate our revenue. They may not even have to start generating revenue yet, but investors just want to know how you think. All right, then who's on the team? It is usually make it more real if you show photos. I often will encourage each of you are there for a reason. Most of the investors will want to know that you have worked with each other before to make the story make more sense. And then sometimes also to share with the investor, what have you guys done together? Doesn't necessarily need to be a company together. Maybe, you went to Hong Kong University together for a long time. We've been classmates for a while. We worked together before, and then we decided to start this company. And then, of course, you should know, and this is a really common way for most of the startup to compare themselves. And of course, you always want to end up to be the top right corner. What I do see sometimes, particularly with startup from Hong Kong, I may see competition that is from the US and from other places. I think from the US is too far. It's good to know that, how you compare with, let's say, Grab is sort of the Uber for Southeast Asia, to make it easy for people to understand. But at the end of the day, I think particularly in Asia, depends on you go after China market or you go south to Southeast Asia market, you should actually compare yourself against sort of the local competition, at least in your continent, to get a better sense of who your real competition are. Because the likelihood of the US to compete with you or you compete with them when you're first starting out is harder. All right, so to summarize, in your pitch, we often love to see traction if you have any. Depends on your B2B or B2C. We may ask for different sort of metrics. Product demo, love to see one. Market size, pain point, product, team, IP, business model, competition, market trends, and if there's any unfair government regulation to help you, and that's why you are so necessary to exist. All right, so now we talked about what you need to talk about during the pitch. I'm also going to share with you a few things that you should show, right? What's that mean is, I don't mean that you have to like truly dress up in a tie, especially in the age of COVID. Probably the first time you meet somebody would be over Zoom. So you don't have to overdress or anything. And actually, it's funny, I also have founder ask me, oh my God, like everybody dressed up in a suit and tie, should I do the same thing? My answer is actually no. I think that you should just be yourself. Particularly most of the startup early stage when we funded are usually a couple engineers, and it's just weird for an engineer to wear a tie. So it's just be yourself, but at least just be clean. that would be helpful. And then really is to show, I like to call it the 3C. One is confidence, show you have true confidence and you're so confident about what you're doing. You want that like projection, even through Zoom, to show that you know what you're talking about. You're very, very clear and confident in what you're doing. And then you're very competent. Means when you're talking about your product, when you're talking about your competition, when you talk about your KPI, you're very, very clear about how you want to get from A to B. Even you're not in B yet, to show and tell how it's going to work. And then be very clear and concise. Sometimes, like I think a lot of the founder gets so excited about the vision and the dream, you end up like meander into a long story about this whole thing. But at the end of the day, as you're starting out, and plus, don't forget, like this is not like a one-hit wonder or a movie you're making with the investor. Your objective is to score the second meeting. You want to be so clear and feel confident and competent, they can't wait to find out more. So that's the whole psychology of it. And then you need to be super careful on certain things that you should not talk about. For example, don't get me wrong, I love supporting Hong Kong University, Hong Kong U. I love hearing your story, but don't spend, if you have half an hour, do not spend 15 minutes just to tell the investor your life story. It's not, I don't want to hear, but I want to hear and learn about what you're doing more. And if an investor really fell in love with you and really wanted to learn more, they will ask you in the second meeting. So don't use the precious time to talk about your life story. I'm sorry, and usually like I see a lot of some of the pitch I see often talk about, oh, I got this reward, or oh, I'm like on the news. The only PR to me is not real traction. It's great that you get some award, but at the end of the day, the real traction you get is growth. of your company. Nothing else really matter. Unless you're basically saying, I'm using PR to drive some install base, or it's going to drive attention and get me like two or three POC, which by the way, PR is very, very tough to measure. So focus on the right thing and on that, which is not PR, unfortunately. And then drop the buzzword. We often, and don't get me wrong, I love looking at companies that's focused on AI, and we look at a lot of companies that are focused on data infrastructure. We love it. That's all things enterprise for Raise. But if you're talking about, hey, I'm building a machine learning algo on a blockchain and virtual reality, trust me, I'm going to run as far away as possible, because it's basically a buzzword pitch. Because at the end of the day, we care more about what's the problem, and then whatever solution you end up using, is it solving a real problem? The buzzword is not going to get you investment. It really just about, it's part of your tech stack. And then last but not least, just don't try so hard. And it sounds really funny, but it is like dating. I don't want you to play hard to get, but you just need to be real. But if you try so hard, is basically saying, oh my God, all I need is another $500,000 to make this happen, and please help me, you're going to scare the investor away. So be careful and not try so hard. So let's assume you have a great first pitch meeting and you address all the things that we just talked about. How do you actually end the conversation? To end a conversation is always about asking questions, because otherwise, how do you score the second meeting? So here are some of the questions that you should ask the investor. From how many investments have you done this past 12 months? What are some of these companies that you invested? Even though you should really do your homework, because mostly it's listed on the website, but it's good to get a sense of, is this particular investor, is she or he active or not? And then, have you invested in my industry before? Means I actually don't know healthcare and I don't know biotech. So for a software focused investor to invest in healthcare, not likely. So you don't want to waste your time. Learn about the decision-making process, learn about the due diligence process, learn about how big is their fund, do they do follow-on? These are all basically basic questions where then you can get a better sense, would this investor, ask them, like, would you rather lead or follow? To lead you around, or what kind of value, or let's say, in addition to investing, what other things do you like to help your companies? These are all really great opening type questions where it become a dialogue, not a one-way speech. So let's assume you have great conversation, pitching and asking questions, and you want to have a great, after the pitch is to follow up. I remember I was pitching for Dolphin Browser to Qualcomm Ventures. And after the pitch, I actually didn't want to even leave the building. I remember I was sitting in the lobby and I told myself I would remember that day forever, which is just sitting there and type up their follow-up email, thank them, send them the deck, repeat the traction, assume they didn't even hear it, and just give them a recap, reiterate like all the great thing about the team, the action item, which is, why don't I schedule a follow-up call, and then remind them you're raising whatever, $1 million, and you're 50% in, you really wanted to welcome them as investors, and then ask for follow-up. So most of these things in Raise Capital for my fund will actually have this whole, most of the questions that I just talked about answer on the website, just to save people time. But a lot of these questions, I think you should also ask your potential investor as well. So to end this really rapid fire talk is, remember, when you're pitching investors, the only objective is to score on second date. And hopefully there are third. But with that, that's the end of my talk. Really quick, you can follow me on Twitter. And I actually have a weekly newsletter that I send out every Monday morning around funding for Silicon Valley, which is called Silicon News. And then we also partner quite a bit with iDendron on providing office hours for most of the mentors from Silicon Valley, and are originally born and raised in Hong Kong. So that's that. I'm going to stop sharing now, and then we can now do Q&A.
So thank you, Edith, for the sharing. And then I'm sure that most of our audience, they have a lot of queries and questions about, the COVID-19 situation and how does it really affect the pattern of investment market during this time. So may I ask if there are some of the industry that are of great interest to VCs these days from your observations?
Yeah, so this year there's a few industries are actually are attracting a lot of venture funding. To start with, anything that supports people. So and of course start with COVID. Healthcare, biotech is definitely attract so much funding, which in the past, and by the way, like everything, most of the data I have is very much either China or US. And of course, I've been in the US for the last few months, so most of my data is from the US. In particular, in North America, in the past, telehealth really wasn't a thing because the infrastructure is pretty convenient, so people actually don't do that. So now it's a completely different ballgame because nobody can actually see each other face to face. They're scared. They don't know how to wear a mask. So therefore, healthcare is doing really well in terms of early stage funding. And so as anything to do with remote learning or any sort of like telehealth, teleeducation that facilitate the future of work. Zoom, as you know, just looking at the public market, the stock is doing amazing. This year, I have one of my company went IPO in June. It's called Agora.io. So they are a Chinese and Silicon Valley company, and basically is Zoom as a service. So you can actually embed video chat into education app, into dating, into shopping. So these sort of apps are all, or industry are all attracting a lot of funding. If you're working on anything that is physical, let's say travel, sorry, you will have a very, very hard time with travel, or anything to do with sort of the Uber for whatever. Those are all really tough just because right now everybody is still scared. Having said that, I don't want to discourage any of you because the worst time is the best time. Because sometimes like when there is danger, and that's when like we need to create some really things that you never thought of before to solve problem. So just because I say travel is really bad, if you're really passionate about it, go for it. But you just need to remember most of the investors are really skeptical.
Yes, I agree with you, Edith, because in between a crisis, there are always opportunity in between, and then there are more problems which startups can solve, and then that means there are another opportunities, right? And
Yeah.
then so for healthcare sector like biotech, so because the research and development time and cost is really tough, so how does it, at what stage should those startup people in biotech industry to start their, to start approaching investors?
So in general, I'm sure that in the audience you have various different. With healthcare, there are very specific type of VC that do focus on healthcare, and then most of the VC, as you're doing research on their website, because at the end of the day, it's my job to meet you. If you're working on data infrastructure, enterprise software, love to talk to you. At the same time, most of the VC, to make their life easier, they usually would say, do I focus on early stage or late stage, or what within healthcare I care more? I do think that, particularly with healthcare, because the life cycle is so long, it actually doesn't hurt to build relationship, even though you may not have something to show for, because I think most of the healthcare investor are the one who is experienced, they get it. It takes a long time. So sometimes like usually what it's not a shortcut, but the way that I usually will do is a competitive analysis. So let's say you're working on something that I don't know, the next Illumina, I'm just making stuff up, or next Pernetics, then I will actually do research and look at your competitor, who have invested in them. Obviously, if they're your competitor, the likelihood of the same investor to invest in you, they actually shouldn't even talk to you because they already invested in your competitor. But then you can start to see not healthcare company, let's say in Hong Kong, who else invested. Then you have a really good lay of the land who you should go after. And then also another tip is, let's say you're going after a bigger fund like a Sequoia. Usually each of the fund, their specific partner is specialized in a particular industry or a particular field. So let's say within Raise Capital, we have a partner, Chris, who is really expert in blockchain and fintech infrastructure. So I'm happy to talk to you. Obviously have enough knowledge, but I always wanted to grab him. So you wanted to see, when you do research, even you figure out that fund, you wanted to find out who, basically it's all on their team page, that are focused on a more early stage. So then when you approach investor, you approach in a way that is super targeted, just like you were going after customer.
Yep. And then one of our audience is wondering, given the conversation is great between investors and also startups, could investors help link up people to the network? So they will help. Will they help those startups to build a network?
That's not what you want to use the investor for, because at the end of the day, the investor will not to invest in you. But what you don't want to do is, let's say you do a pitch, and then all of a sudden, if the investor don't even want to invest, and then they were like, oh, can you just introduce me to some people? No, they won't do that. Because when they introduce, let's say if you ask me to do it, the first question any investor or anybody will ask me is, have you invested? And you don't want an investor to say no, because it will be a bad reflection of you, right? So usually, like what I would encourage, but yes, you do need to build a network. And that's why, like as a founder, you're a hustler, right? And a lot of time, that's why a lot of founders will start with certain advisors. The advisors are usually, you tap into their network. And then also, I don't know about Hong Kong, but in the US, there's a couple of, let's say for healthcare, a couple of like these healthcare specific incubator. So then the whole purpose of that is to help you to build a network. But you do want to be careful when you interact with an investor. If they say no to invest, they usually wouldn't like start helping, because they wanted to focus on helping their portfolio. So ask for one thing at a time. Your goal with an investor is to get their real support, which is the money part. And when they put their money in, they will help you. And so be careful with like sort of set the expectation with potential investor you meet.
And then sometimes when we have an idea and then it's validated, but nothing is settled yet, but maybe we have an idea of how to monetize our ideas, but should we say that in the pitch for something that is not settled?
I think usually, like if you're still a student, investors usually give you a lot more leeway being in school than adult. So in some sense, like investors are human too. Like they actually want to help students. I think being in university is the best environment to ask whatever question that you want to ask or whatever idea you wanted to say, because most of the investor will be okay for you admitting what you don't know. It's fine. But once you leave university, I think people will give you a much more higher bar. And what you want to say is, you may not know all the answer, is okay. But what do you want to say instead is, okay, we have not started monetizing, but we've been studying a similar business model that is pretty close to what we do. And what I see is this and this is charging 10%. That is doing subscription. That is based on usage, so sort of like Dropbox style. You want to show and be able to articulate the fact that this is how you think about certain things, to show the thought process. That make it a dialogue and make it more thoughtful as a founder, even you don't know all the answers.
Yes, there's one asking like for SaaS model fintech company, what is a good traction for an early stage investor, say seed round? Like, do you have any benchmark or framework for this kind of model?
It's a great question. And by the way, like, I think depends on which region that you're at. It's also different. So with SaaS, although I'm using a very US standard and you can adjust according to what region. With SaaS, if you're raising a seed round, so let's say, for example, right, if you're applying for 500 startups or YC, so usually sometimes you may not even need to launch. So that bar is pretty low. But let's say you graduate from sort of any sort of incubator and you want to raise anywhere from, I don't know, let's say $500,000. Okay, I'm talking about US dollars. So whatever the end of the, like a few million in Hong Kong dollar. If you're raising at that level, I would like to see at least a few million in ARR, like annual recurring revenue. So if you divide it by 12, is at least, you know, from 50,000 Hong Kong to 100,000 Hong Kong that you are generating something. If you're talking about SaaS, right? Because at the end of the day, software as a service, which means you want to encourage subscription business. And like actually, there's a whole lot of like pricing related blog posts and study that's out there. But just in general, like we would like to, what we do see is from seed to get to the first $1 million US dollar revenue, that is a big hump. A lot of folks, when they get to the 1 million or 2, they will start to think about, oh, maybe it's time for me to think about the next round of fundraising. So whatever that you decide to raise, usually we will encourage you raise about 12 to 18 months of run rate. So what that means is, okay, I will ask a whole bunch of questions is, how many people do you have? When in our head, we start doing the math. A team of 10, each person is going to cost me, I don't know, $120,000 Hong Kong dollars. I'm going to times 10 and then or times 18 months, whatever. Then I will start to think human and then server costs and then whatever marketing costs. So you add it all up, 18 months. So you usually rate seed with that. It could be making nothing with just some POC. If you're going after enterprise, it's okay, seed, not to make money. But I would like to see if you're going after corporate is some tests. Ideal is 3 or 4, even you make no money. And then whatever you raise is to help you to get to the first million. Valuation wise, depends. If you are not making money, obviously, definitely single digit valuation. But if you are monetizing, you get to like the first 1 million US. It could be anywhere from, I don't know, like 7 or 8 million valuation up to maybe 15, 16 million. Again, these are all US price. And I think China is actually more expensive in terms of valuation because there's a lot of people. What I do see, Hong Kong and Southeast Asia, usually lower valuation, just because it's not as a high growth or people are less willing to pay.
We have another question from a travel tech staff here. So he said, travel industry literally stopped and it's uncertain when we can travel again, even in Southeast Asia. So in your opinion, as a early stage travel tech startup ourselves, is there any way to convince or show our traction to investor before traveling resumes? We have been working on some noise and content to earn traction on social media and marketing, but not sure if that is valid and sufficient or convincing.
Yeah, guys, I'm so sorry that this is the worst time to raise money for travel tech, unfortunately. Having said that, thanks to, I don't know if you guys catch up with the US news. Yesterday, Pfizer said that they're going to have a vaccine, and all of a sudden, all the stock for United Airlines, for all the hotel jump 25% without doing anything. So in some sense, I'm more like a positive person. I do think it will come back. So what I am seeing is if you're doing any sort of social marketing campaign, be able to not only collect email addresses or some indication or like some survey, or I have seen actually, at least in the US, they do some crazy, actually is on the Wall Street Journal, how Air Asia was doing these like half a year or 1 year travel pass, unlimited for $100. It's ridiculous. But they got like 3,000 people buy it like in an hour, right? So obviously something is working. You may not make as much of a margin or revenue you would like, but if you're a travel tech startup, this is the time to get creative where you want to be able to show, okay, they're ready to buy the minute this happened, or you do some insane discount, which only if it worked for you. I don't want you to break your bank, but just something. I have actually invested in company that they didn't even have a product, but the founder, an amazing female founder, she was able to like play some Facebook ad and gather about 10,000 email sign up waiting for her product even before she launched. And the way that she articulated how she did it was so thoughtful that I'm like, I got to invest in this person. So she get me really emotional about it because she was so good at it. So if you can't show your product working because it's the worst time, do something like this so that they know, at least I want to know you know how to do growth and marketing.
So Edith, we all know that investors aren't really looking for companies that check off the list of doing the right thing, but not like the wrong thing. But what are the hinges that investors are looking for to say yes? Is it a potential return of investment or anything else?
Yeah. So I really meant it. Like when I went through the deck, and I get it. Sometimes I think in Hong Kong is like the heaven for real estate. And sometimes I have friends who have invested in real estate and obviously have great return. And so therefore, sometimes when I meet a Hong Kong founder, they'll be like, oh, I'm thinking about maybe what's going to sell to this person, we'll go IPO. And I'm like, in my head, you don't have to talk about how we end up going to get married at the end from an early pitch. Because as I really mean it, is most, at least in the US, want to invest in the next Mark Zuckerberg, which is somebody where this is going to be the future of the internet, or this is going to be the future of fintech. This person is going to define the future of travel. Like I want you as a Hong Kong U founder to project that confidence and not necessarily talking about, I'm going to get you X number of return, I'm going to go IPO. Because the minute that you say that, you actually give me an indication, or you're doing it for the money. And I don't think somebody purely do things for money will get really far. Because seriously, you guys are all so smart, particularly from Hong Kong U. You can get a great job from an investment bank. You don't have to create companies that actually don't make very much money at the beginning. So in some sense, focus on what you're super passionate about, what you're doing, what problem. If you address the 5 or 6 things that I went through in the deck, that's already good enough for me. Because again, you want to get the investor to be super excited about what you're building. Sorry, I did miss one thing in my deck. It's the size of the market. Pain point, what you're building, traction, competition, team, size of the market. If the market is so big, even you have 1% is good enough, right? But I want you to be able to articulate that. So that fusing is always what I look for.
So always remember the 3 C's: confidence, competent, and also concise.
Yes.
So yeah, that's a point. And then one of our audience wondering, should I use other company valuation as reference to my own startup? And she means that how to balance on how much percentage of share they give away as valuation of their own startup.
Oh, that's a great question. So usually, like for us, at least we try to raise capital, trying to be as transparent as possible. If you are a normal VC fund, means for us, we usually want, if I lead. So there's this terminology, I don't know if Hong Kong Investor does that, but usually when you ask the question, would you like to lead or follow? So what that means is I will be the person to set a valuation. And if I decide to lead, usually we would like to at least be able to invest, and in order to buy share from 15 to 20% of ownership for a lead investor. So hypothetically, if your company, just simple math, worth value at 10 million, and which means I want to get 20%, I will invest in 2 million. Your $10 million valuation. And sometimes, of course, you may want to have other investor involved. And in some investor, let's say most of the angel, they actually don't set a price or valuation. Then you can actually talk to your lead investor. And it's very common. It's like, hey, I have some investor lined up, but they're mostly angel. They wanted to follow. And then as you asked earlier about comp, like comparable other startup valuation, I think is good to mention it, but I wouldn't put it in your deck, because it's a fine balance between you want to show that you care about the problem and you would do this company no matter what, even though there's no investor. And you don't want to like so fixate on about money, but don't get me wrong, I've been a founder too. Like you don't want to give too much away, right? So do your homework. Yes, do figure out what are the comparable, who invested in what and how much. You do need to know that as a good founder, but don't put it on the deck. Make it a conversation. And usually some investor like me, I will ask you, hey, what's your expectation in terms of valuation? The right answer is, I would like the lead investor to decide. Because if you start saying, hey, I'm looking for 100 million, I think you will scare the investor away, because it is like dating, right? So let the investor to put a term sheet to set a price. The psychology of this, it is a dance. Don't show too eager, but at the same time be competent, where, hey, you have a clock, you don't want to spend months and months like to fundraise. I do think that if you treat this process as a sales process, you would do really well.
Okay, so I guess Edith has answered all the questions. So maybe we can do some.
I think there are some, yeah. Like
really?
One is like what should we say or ask if we notice the investor not feeling interested after our pitch? Like the girl is not interested in dating for you anymore. How to keep the good relationship, because maybe your next project you will reach out to the same investor as well.
Actually, like I remember, like when I was pitching, like if I sense a person not interested, I would literally say something like, I know it may not fit like it may not fit your investment thesis. Actually, I started to, but unfortunately not a lot of people do it to us. I highly encourage you, being a super smart founder, you should just ask, hey, with what we're doing, does it fit your thesis? In terms of stage and vertical, where we at, like what's your expectation with a company like us at our stage in terms of traction? Just make it super interactive. The quality of the question that you ask will make it less awkward because you will realize sometimes like investors don't beat around the bush. They just sort of like looks like they're so bored or yawning or whatever. So that's the point of where you need to stop talking and start asking questions. So that list of all the example questions, really, I mean it, because now you're keeping them awake. to talk about themselves. And you are their favorite founder if you make them talk more. So that's how you maintain relationship and still send a follow-up email and thank for their time. No, you're not interested because it's not your thesis, but if you know investor early stage in healthcare, happy to talk to them.
To maintain the relationship and continue the dance. And we got a follow-up question from Nathan, who asked about the check-off list of doing the right thing and not the wrong thing. So he asked, doing the ask, wouldn't that automatically create an evaluation? For example, 20% for 100K would make my company a 500K evaluation.
Yeah, so
He means like valuation, yeah.
Yeah.
So usually when you, a few things. In the US, it's very founder driven. So it's not uncommon for a founder and say in their deck, at the end of the deck, literally say, our ask is, I'm trying to raise $1 million. In this case is, I'm trying to raise $100,000. But I usually wouldn't say, or most of the deck that we have seen, it wouldn't say $100,000 for 20%. You as a founder it is a dance, right? I want to invest the least amount of money to get the highest ownership. Your job is to get as much money without giving too much away. So there is a conflict in some sense, right? But what you don't want to do is put everything on the table out there, which means you should focus on how much do you really need. Back to, is $100,000 even enough for you to survive a year? I have no idea. You have to figure out. But doesn't sound like, doesn't matter if it's US dollar or Hong Kong dollar. I don't think either way is worth it. So if that's the case, and by the way, there's another thing I don't like, and sorry, I'm like very particular. I have also met founders in Hong Kong where they come to me and basically give me a long list of all the subsidies they get from government and say, hey, I was able to get like $1 million subsidies. And I'm like, great, but you're spending way too much time filing paperwork. Like you may as well like build a product and do marketing. That's a better, in my head, a better traction. But it's great, they don't take equity. I get it. So in some sense, what you do want to say instead is, okay, I wanted to raise $100,000 and then the breakdown, how you're going to spend it. Most of the time in the investor head, they are ×5 or ×6 that equal to your valuation. In their head, they're doing it anyway. But what you don't want to do is to so blatantly on writing to put 20%, because now you fix your own valuation. You may be able to get away with less, giving away less. So you don't want to put it down on paper. You always want to get the investor, unless you know what, you're so confident because you have done this before. Maybe you joined a startup before, you know what the market price is. Then you basically say, you know what, I just know my company worth, $1 million. So therefore I want to raise X. You set the price. We have absolutely seen that. And in fact, in the US, what's really common is for 500, there is, by the way, all these paperwork is free to download. 500 is 500.co/KISS, is free, all the documents. And the YC is just the YC safe. These are all convertible note documents where you need to worry about what's the cap, pretty much means valuation, what's the discount, and how much you're going to raise. And that's all in the few pages of documents. These are something that you as a founder should always think about. But if you're raising from a VC like me, usually we would like to set the price. Sorry, it's a very long answer for something very simple.
Really some important tricks. Okay, so let me introduce the next week session. Okay. Okay, so for next week, we will have Dr. Yiwu He, our Chief Innovation Officer at Hong Kong U, to share about his life science entrepreneurship in the States. And for upcoming events, we will have some collaboration cast with Amazon Web Solutions starting from tomorrow. So the topic will be big data, and we will start from the basics. So if you are interested, we will send the link to the WhatsApp group and just register for it. Okay, so thank you very much, Edith. I guess that's all for today. So hope to see you all next week. Okay, bye-bye.
Thank you, Edith.
Thank you, Edith.
Stay safe in the States. Bye.
Yeah, bye-bye.